Welcome back to the Titanium Hangar, and happy Friday, everybody. This is Mike. Today I want to talk to you about price increases, inflation, and how this is just the beginning. We're going to see a lot more price increases to come. But last week we had some fun talking about what I look forward to in 2022, but I don't look forward to the price increases. We see price increases for everything from food to energy, and even more, but very specifically food and energy are a big deal going on right now. Obviously, collectibles are being affected, and it'll kind of shock and surprise you. Yes, there is some corporate greed going on here, but that's not what's driving this. We're going to talk about all the causes of inflation. We're going to talk the symptoms of inflation. We're going to talk about how it's possible, the steps that can be taken to stem off, slow down, stop, or possibly reverse inflation, and what you can do to hedge your bets against it, because the proper steps will never be taken. Let's talk about this coming up. So if you look at the price of beef, has gone through the roof. Ribeyes are $20 a pound pretty much everywhere and only going up. Pool chlorine tablets, which is not something that everybody needs. It's not a general requirement for everybody, but it's doubled in price over the last year. Of course, gas at the pump going through the roof. And of course, we're paying for all this, but all this has one thing in common. Utterly rampant inflation. They're saying it's the worst inflation we've seen since 1982. That's what you hear on the news all the time and all that kind of stuff. But it's actually worse than that. Now that we look at it different, we don't factor in stuff like food and energy. So the oil prices and that ribeye steak, none of those are factored into this. So if you factor all of that in, since those are taking a massive jump in price, we'd be looking at closer to 25 to 30% real world. Now, you just take a look around at your expenditures. What are you spending your money on? How much more is it? How much more expensive is it than it was last year, than it was in 2019? Think about all of that, and then you think about we're being told it's only 7.5%. 7.5% also is the tip of the iceberg. The real number is closer to 30. We're starting to see toys, collectibles, all that stuff going through the roof price-wise, and we're talking new retail prices going up, multiple tiers of price increases, and we're going to kind of get into a little bit more than that, but these companies actually have been taking some of the hit early on, and we'll see that down the road. So, meaning more price increases to come. So a lot of people want to talk about shipping, and a shipping container now costing a lot of money, 1,000% increase, or 10 times more than it was just a couple years ago. And yes, it's true. Now, there's a whole lot of issues. There's a whole lot of problems surrounding why these shipping containers and the expense of this. And it's more or less a backlog, a bottleneck in California that could get freed up. Could, but won't. And there's a lot of different estimates on when that'll free up. First, we got to get over the hurdles of California itself, which is part of this whole attack on oil we're going to talk about here in a little bit. But when you look at this, you can't have trucks older than 2011 to enter. So that's a new law. So that's an issue right there. You are actually struggling to find truck drivers in general, but ones that are willing to come in there and get this stuff out of there, you're not going to let them in the state. So that is insane. That is crazy, but it's a big part of the problem. And some say the biggest part of the problem. So the havoc on the ports or at the ports is causing a national or a worldwide great supply chain disruption. Now, there's discussion, will this free up in 2022? No, it's unlikely to happen according to this article right here. Also, we hear this, okay, it's going to go through 2022. Then later on this year, we're going to hear it's going to go through all the way through 2023. And so nobody truly really knows when we're going to see this lift. So it is going to be a giant pricing burden over us until it's resolved. And there's no resolution in the near future. Cost of materials is going up. Obviously, plastic's more expensive, and that's true. I mean, they're citing increased materials costs, increased shipping costs. All these things get cited as why things are going up in price, but still, that isn't the overall cause of inflation, and it's kind of a whole inflation cycle that is just going to keep spiraling upwards. But materials do cost more, but now we're seeing another problem that's going to affect material cost. So we're seeing soaring oil prices, and as you know, oil affects everything. It affects the cost or price of plastic. It affects disposable income of everybody. Even if you don't drive vehicles, your Uber's going to cost more, public transportation is going to cost more, and of course, every good and service that you buy or consume is going to be going up along with this. So the problem is that oil was already shooting through the roof. It was going up because it's been attacked since January of 2021, and in July of 2021, we had another issue. So in July, basically this pipeline, the Keystone XL pipeline that was under construction had been halted because they weren't allowed permits and there's no new drilling permits. So we're basically shutting down all of the new production that could happen of oil here in the US. Now, all these problems that we have in the US are very similar in other countries. So this is a global issue, not just a US issue. But now we've had all these problems that with the inflating oil price before. But this past week, we had another issue. Without touching too much on it, we have a global issue that's now really raising the price of oil and gas. And yes, it's fluctuating. Yes, it's coming back a little bit. But long term, how long will it stay up? Now, the good thing is that the fact that oil is a commodity, it could go back down. And the good thing is when it comes to oil and it comes to greed, everybody sees that high price and they want to maximize their production so they can get as much out of it as they can. But how long will it take for supply to meet demand and for prices to level out and go back down? Nobody really knows. But the good thing about these commodities and why commodity markets fluctuate is because they can go back down. But inflation never seems to go back down. Once prices get to a certain level, they stay there or go up for goods and services throughout the world. So the next factor is labor, the increased amount of labor. But now I've touched on this in the past. People get real mad when I talk about it. But when you look at the fact that labor is having to go up and increase, that is a side effect of inflation because people need to get paid more. They want to get paid more so that they can actually maintain the same level of lifestyle as everything around them is getting more expensive. So that is why labor goes up. The cost goes up right there. As we can see with this article here, 20 out of China's 31 regions have increased their minimum wages so far in 2021. Prices of labor are going up. People are making more money and living a little bit better lifestyle, and it's costing more to produce everything. Now, I don't know exactly what's going to go on in China, but I know that affects the products that we buy a lot. And looking at this right here in the US, raising minimum wage is a big deal. But what a lot of people aren't understanding is you don't even have to mandate $15 an hour anymore because workers are at an advantage, corporations are at a disadvantage. So you can almost name your price at entry-level jobs these days. There's a big competition between companies and just McDonald's. And by the way, McDonald's competes with McDonald's because it's not really corporate anymore. They're almost all franchises. So they're different people at different locations fighting for their own operation and to staff it and doing whatever they can. So when you look at all of this, just looking at McDonald's itself, they're paying close to or over $15 an hour in a lot of areas simply because of the fact that workers are in a strong position right now. But that doesn't change the fact that average hourly earnings for all workers were only up 5.7% in the past year, below the current 7.5% inflation or the real felt 30% inflation. So all of that's contributed a little to the inflation. That's a bit of the inflation problem that we have there, which by the way, inflation shouldn't even exist. But anyhow, this is the real cause of inflation. And if you look at this chart, this is the Fed funds balance sheet, the Federal Reserve balance sheet, and basically the money supply, that they create money out of thin air. Anyhow, it shows you the spikes. And what you can see is that we've doubled the money supply back in 2008 and the 2007 to 2009 recession timeframe. And with that, we saw inflation down the road. So it's kind of a delayed inflation. Now, what happened in 2020, we're feeling now. So as you can see over there, we doubled the money supply again over there over the course of a couple of years from 2020 to 2022. And now we're starting to feel the effects of that inflation. So anytime you hear anything about government spending, the government is broke. So they have to create the money out of thin air. And that dilutes down your money that you already have, meaning that you have to pay more to get the same goods and services. More money chasing the same number of goods and services, but now unprecedented times, more money chasing less goods and services available. So a lot of this money talk is boring. So just let me give you an example. Let's say you take this half empty bottle of ketchup, and the thickness of your ketchup is equal to the buying power of your dollar. So if you were to say dilute it down by printing more ketchup and creating more ketchup out of thin air, then how would you do that? Well, if you added water to this and filled it up the rest of the way, shook it up, and then poured it out, how thick would your ketchup be? It would be runny red water. And that's effectively the buying power of our dollar, is turning into runny red water. It's just runny, watered down dollar that can't buy as much. And guess what? It's not just the US. Every country is doing the exact same thing, because no country actually backs their currency by anything other than their good trust and faith. Walmart's having record windfall profits. I'm going to use Walmart as an example of corporations, companies that are benefiting from all of this. And the thing is that, look, prior to 2020, they looked like they were struggling to be up versus year over year. And then 2020 hit and they're having record year. And then 2021 was a record year. 2022 is still up over all of that. So pretty interesting at the same time that they are cutting back on a lot of things. Walmart has stopped doing their ad match and all of that. So it's kind of crazy how Walmart gets all these record profits and now is tightening their belt, because it's really going to be hard to beat it going forward. And they know it. Getting back to companies like, say, Mattel and Hasbro and their products. Now, I want to say that their product that they have been making for years for a certain price, and they try to keep it the same price, now they're upping the price on those. Consumers are in shock because, hey, I've been collecting Star Wars Black Series for over a decade, and they've only been 20, and they're still 20. Now they're 23. Now they're going up to 27. Probably going to be hitting 30 soon. Same with these. Same with Mattel and their He-Man line that was 15. Now it's 18 and 19, 17, 18, 19, depending on where you buy that and all that. But these companies didn't raise it immediately. See, they waited a while. They took some of the hit, and that was because they don't want to lose demand. The problem is when they start losing demand, then these things aren't going to sell. If they outprice the market, which is really close, they are really close to outpricing the market, people stopping to collect. If they do that, then these things are not going to sell. They're going to go to clearance, and then the next run they're going to produce less because they expect to sell less based on their new historical numbers, and then the price on those have to be higher because they produce less. And so less people are going to be in on buying it. So it's going to be a vicious cycle of raising prices every single year, less people being able to participate, and of course, maybe waiting for clearance, and then of course, less getting produced every year. So what can we do to fix these problems? How can we stop this inflation? How could we all band together and stop inflation? Well, a lot of people say stop buying stuff. That actually could have an effect, but that's not the solution. Truthfully, the solution is to go back on a gold standard and have real money. Now, if we went back on the gold standard and we had real money, then it was backed by gold. There's a lot of problems with that, which is why we're not doing that. The governments aren't going to do that. The big problem with that is that it would take gold to approximately $50,000 to $80,000 per ounce. And that in itself is not a big problem. Just your gold's worth more, boom, overnight. That doesn't mean everything else will have to get more expensive just because gold's more expensive. Yes, gold is used in manufacturing, all that kind of stuff. But the bigger problem is that they can't spend with a blank check. They can't write these blank checks all day long because they actually have to have fiscal responsibility. The gold standard actually does sound like the best solution right here. Yes, we will see a temporary, a massive, painful moment in history going back onto this. And then once we readjust, then everybody goes back to everything being paid for with real money and not money created out of thin air. And then we don't see inflation hardly at all. Problem with gold is we've shown a history of gold confiscation. They can confiscate your gold if they want to, and that's one problem with gold. So for me personally, I can talk a little bit more about this and what you should do, but we've seen this in the past. We have seen gold confiscation. We've seen some other issues. We could have more and more problems. The next thing we can do to combat inflation would be to raise interest rates. So when the economy is in a massive crisis and struggling to get by day to day, they usually lower interest rates to something low like 1%. Well, since 2009, we've been right around zero. a little bit above zero. We haven't gone negative. Well, in real terms, we're negative, but we haven't gone negative. In 2016, they started raising rates again, but they stopped at 2.25. They didn't even get halfway back to a normal interest rate, and then it all turned back around. And now we're letting it sit at next to zero. Now we're hearing there's going to be between 5 and 7 rate hikes in 2022. Well, here we are in March, and they haven't done it yet. If they haven't done it yet, why haven't they done it yet? If they really are going to try to fix this inflationary problem, and this is one of the only tools that they have, and they're not even utilizing it yet, why not? Well, I can tell you why not. The real reason that they're not being aggressive with this interest rate is because of the debt. Now think about this. If they were to take it back to normal rates of like 5%, it wouldn't truly fix the problem. They'd have to take it to match inflation, to 7.5%, to stop the inflation, to start getting it to go back down. That is one of the economic theories. But the real inflation is around 30%. So even 7 wouldn't do anything. So this 1.5% interest rate that they're proposing by the end of this year won't do much to it. They would have to take it to at least 5 or 7%. If it was 5% on the 30 trillion, you're looking at $1.5 trillion a year just to pay interest on the debt, which is getting pretty close to half of the revenue that they collect. So think about all this. They can't afford it. They can't afford to raise rates much higher than 1.5%. If even 2% would be a challenge, and they'd have to go back in the other direction. They would lose one of their only tools that they say that they have. So what else could do to bring this inflation under control and maybe even reverse it? Well, a recession. Everybody's scared of the word recession. It's terrifying to everybody for whatever reason, but really it's just resetting our prices back to normal. We've had a run in prices. And if you were to basically step back and say we have something that will lower the prices, well, a recession will. It's good for citizens. It's good for consumers. Now, one of the things is the difference between a recession and a depression. A recession is 2 quarters back to back of negative output. So the GDP goes down for 2 quarters. A depression is 2 full years of that. So once you've exceeded 2 full years, you're out of recession. More than likely what would happen in a depression in modern day era, which, by the way, depression is scary also, but when you have a recession that lasts 18 months, then you have one up month, then you have another recession that lasts 18 months, you technically are in a depression, but there was something to interrupt that. But then people say, well, is it down 10%? Is it down 20% each year? So really, at the end of the day, a recession would be good for us. A depression could be very, very bad because of the fact that a lot of unemployment, lack of opportunity, there's a lot of stuff there. So yeah, it is scary. You're playing with fire. If we are in that situation, you got to think about it's a correction time frame, and we probably need it. Now, since we obviously see that none of the steps to fix this inflation problem are actually going to occur, they are going to go through the motions, act like they're doing it, say they're doing it, and act like it failed, and oh, well, we just can't do it anymore. Well, here's what you can do. What you can do personally is start to stock up on necessities. If you go to the grocery store and you buy stuff, and you say, well, this is what I generally get 4 cans of corn and 4 cans of green beans, buy a couple extra cans of each of these, and start having a back stock between now and whenever, as you know, price is just going to continue to go up. And then this stuff isn't even counted in inflation right here. None of this is counted in inflation. So you could go in and you could buy a little bit extra, get a little bit of backstock of all of the necessities that you have. And that's one way to prepare for this. Buying gold, stacking gold and silver. Now, there are some problems with gold and stacking. Like I said, I was going to talk about, here are some problems with it. First off, the confiscation issue, that it could be confiscated and all that kind of stuff. But the other situation when it comes to gold is, how are you going to, if you're struggling to get by right now, how are you going to stack a $2,000 gold coin, hoping it goes to $80,000? And if it does go to $80,000, how are you going to convert that into paying your bills, paying for stuff that you need on a daily basis? Maybe you've got a handful of gold coins. You're going to convert one gold coin and hopefully it lasts you 3 months, 4 months. I'm not against gold at all. I'm just saying there's a more practical way. Silver will give you similar upside potential or storage of value, but it's a smaller denomination. And yes, when silver shoots from $26 to $2,600 or something like that, when this happens, or when we have this inflation go on, it's a store of value. You can convert it and it's easy to transfer. Silver is utilized in manufacturing. Silver is also It's just better, in my opinion, for the average person than gold. The gold is very expensive, hard to get into, and hard to utilize for your transferring the gold into cash so that you can buy stuff. But yes, silver, so much easier, and I actually personally do it. You can also get a side hustle. Now, you can get out there and get yourself a side hustle, a second job. But you got to understand the tax liability behind all of this. That if you work two jobs that, let's say each one of them makes $20,000 a year, so you make 20 in each one, you're getting taxed as if you have that $12,000 deduction. But you're only going to get the one $12,000 deduction until you take 20 and then you make a total of 40,000. So you've got to make sure you're getting enough taxes taken out of both jobs. Remember that, for you to actually not owe a crud ton at the end of the year. And you know they're going after people making less than $20,000 a year. We saw that with the 1099K situation, so that's a fact. I'm kind of tired of hearing if you make less than $400,000 a year, you don't got to worry about it, because they just hired 25% more auditors to go after people that make less than 20. So, and then the other thing is collectibles. Now, there's a double-edged sword to buying, selling, using collectibles in a time like this. So I will say that when you look at a store of value as collectibles, collections, art is always one of those things that always seems to go up, but that's not something that I am an expert on. I'm an expert on toys. Well, maybe not. But anyway, what I've noticed is that the rare toys are the ones that still continue to climb in value, and then the common collectible stuff seems to fall off. So the rarer it is, the higher it goes in value. And the reason for that is that there's always affluent people out there that are still working on their collections. They are still collecting, while you have a lot of other people that are struggling that are just selling off their common stuff and flooding the market with it. But the rare, very valuable pieces that only a few exist are the ones that are going to be harder to get. And lastly, we've got more spending on the horizon. So from now to the future, looking at there's a bill getting passed, and this is the We Want More Inflation bill. If this gets passed for $1.5 trillion, then we will definitely see more inflation for years to come. And that's a problem. So whenever you hear we're going to spend $1 trillion, you know that's a red flag signal to more massive inflation. And it's coming. And there's really nothing we can do about it. We can prepare ourselves. Like I said, prepare yourself for what is to come. And by the way, the government doesn't have $1.5 trillion. They don't even have $20. They got to borrow it from the Fed. They got to get it from the Federal Reserve. So anyway, I hope it wasn't too much of a bummer here on your Friday. But everybody wants me to talk about prices, and there's the reasons they're going up, and they're not going to stop, and it's going to get worse. But it is what it is, and we do the best we can to still have some fun every day. Let me know what you think in the comments below. Like and subscribe. Try to hear me out.